just giving another minute or so for a few more of the participants we can see who are logging on at the moment. Okay. Hi everyone, my name is Rukshana Sashankan, PEXA's Executive Manager for Practitioner Services here in Queensland. My role focuses on supporting our Queensland practitioner members, helping them to develop their online presence and enabling them to settle property transactions digitally. Now, prior to joining PEXA, I was a legal practitioner in Queensland working in the conveyancing space. I certainly appreciate from a practitioner's perspective the critical stages of a property transaction. Time is of the essence, and that preparation that's required on the morning of settlement. So now, as the Queensland market continues to transition to digital settlements, we have been receiving an increased demand from you, our members, for a closer look at the processes and procedures involved in preparing for a PEXA settlement from the perspective of the banks. So today, in this webinar, we will give you some of that context, and we're hoping that it will provide you with a greater understanding of those processes from a banking perspective. We're also hoping that this will enable further industry collaboration between legal practitioners and financial institutions. Now, if you have any questions to pose during or post this webinar, please email them to us at events@pexa.com.au. The webinar is also being recorded, and it will be made available on our PEXA community page. Now it is my pleasure to welcome from Bendigo and Adelaide Bank, James Astill, Senior Manager in Bendigo Processing, and Ruth Behrends, Loan Officer and E-Settlements. Welcome to you both. Bendigo Bank have been a major contributor to the move towards digital and have been recognised in the banking industry as leaders in best practice and innovation. So James, what fantastic recognition from the industry. Congratulations on that. So I thought prior to starting the Q&A, it'd be great to hear a little bit about your role and Bendigo Bank.
Thanks heaps, Raksha. That's very, very nice of you. So yeah, I thought I'd just give a quick introduction of myself and my working career. So I started at 17 as a legal clerk for a firm in Brisbane, basically as a professional jaywalker, running between settlements all over Brisbane and Gold Coast CBD every 15 minutes before while I was doing my university degree, working as a conveyancing paralegal and paralegal assistant. So then when I finished university, I moved into the finance industry and in a couple of commercial roles before coming to Bendigo 11 years ago. So in the last 8 years with Bendigo, I've been in an operations and managerial role in the processing area, focusing mainly on our incoming mortgage settlements. So I've had the privilege of seeing the industry transform in that period, quite significantly from, paper settlements through to now, almost entirely PEXA in some states. So I thought I'd also just give a little bit of context around how Bendigo is structured in its processing. So we do processing for around in-house, about 90% of our incoming, 90 to 95% of our incoming mortgages, where we do end-to-end without a panel solicitor. So, and we do that primarily out of two main locations, one here in Southeast Queensland, where I'm based, and the other half out of Adelaide. And all in the processing side of things, we take care of everything from anything post-approval of the loan through to settlement, and then, the ongoing life of the loan thereafter from a processing perspective. So we manage around 2,500 loans a month of all different types of settlements, from full purchase settlements through to refinances down to simple further advances and everything in between. We also have one team that is primarily dedicated to the electronic settlement space on the incoming mortgages. So today with me, I've invited one of our loans officers and SMEs from that team, Ruth Behrends.
Yeah, thanks James, and thanks Roxana. Yeah, I've worked with Bendigo in processing for about 6 years across several different teams, and I've been involved in the PEXA space since Bendigo first started transacting, so currently working in our e-settlements team. Yep.
Fantastic. So our first question, if we can go to our Q&A now, thank you both, is around explaining, if you can, from a bank's perspective, please, what's involved in a PEXA settlement?
Sure, I'll take that one. So I guess as a larger sort of organisation, we're dealing with thousands of settlements a month. It's quite a logistical challenge to keep on top of that with all the different requirements for every different state as well. And I guess as well, we also have large volumes of money being transferred all around the country. So the only way to really manage all that is actually to break all of our processes right down, so that we don't actually have one person handling a file start to finish. We have to have different segregations of duties. So we have multiple different teams that will touch a loan advance through all its different stages in the life cycle. From we'll have our lenders in our branches doing our customer conversations and information gathering. We'll have our credit teams that are doing our approvals, and then it will come through to our processing teams to prepare our documents, check that all the documents are correct, verify all our loans and systems are set up correctly, so that we're setting up a loan for 30 years, that it's it's going to be 100% correct from day dot, through to all of our post-settlement teams. So I'd say it wouldn't be uncommon, I'd say, on a normal loan for perhaps 10 people to touch a single loan in its journey, with the bank. And that segregation of duties is really important for us, because it's an efficient process where a person is working on one core task with one set of knowledge base can be very efficient and productive. But also from a risk perspective, it's really important, because at the end of the day, we are dealing with millions and millions of dollars every day, and it's got to go to the right places in the right amounts every single time. And we have to have our loans verified and set up correctly, because they are, if it's not done correctly, they are really large customer impacts. In Bendigo, we don't have any direct systems that integrate with PEXA, so we manage our workspaces through the PEXA system. So we manage all of our conversations, our invites, and the workspaces and settlements all through the PEXA system directly. And then we do a lot of cross-checking and verifying about, over the systems versus, what the bank systems are as well. So, there's a lot that we do in that space. So our first touch in PEXA is when we're instructed to prepare the documents. And at that point in time, we will search and find if there's a workspace already created, or proactively send an invitation out to get the ball rolling to all the parties involved that are nominated on the contract of sale.
Great. So now we move into, so we've created the workspace, so you've sent the invitation. If we sort of fast track this, James, to the morning of settlement, and this was definitely a very popular question from our members. That morning of settlement, in your previous life too, you can appreciate how busy that gets in terms of preparation. So, and there's lots of things to be finalised on that morning of settlement. So can you explain, please, the process and preparation undertaken by the banks to navigate this period of time?
Yeah, of course. I think as everybody appreciates on the webinar here, the day of settlement is probably the most stressful day in a settlement. So what we try to do is we try to process everything that we possibly can before the day of settlement. So we're only leaving the key control tasks to the day of settlement. So the basic things like, checking, verifying our titles and actually funding and drawing down the loans. We try to do as much of everything else beforehand, 3 to 5 days out. So for us, that is verifying once the customer has executed all their mortgage documents, there is a visual, full check that everything has been executed correctly, that we've got all of our documents back. We're checking beforehand that all of our credit loan conditions have met. So there can be all sorts of different outstanding items there. Customers might need to still provide some type of financial information, or special conditions that need to be verified, all sorts of things. So we have to verify all of that. We also have to verify that we've got all our valuations back and they match what we were expecting. All the appropriate insurances for the incoming security are in place and are sufficient for our purposes. And so we try to do all of that beforehand, so that what we're actually leaving to the day of settlement is as minimal as possible. Because what we don't want happening is, these issues coming up, right at the last minute, because that causes, stress for our people, stress for all the parties involved, and importantly as well, stress for the customers, which we don't want happening. So Ruth, do you want to give a little bit of detail about what are some of the actual specifics that we're actually checking on the day of settlement?
Yeah, absolutely. So on the day of settlement, we have to do a lot of similar checks that we would do for a paper settlement as well. It's just via our PEXA system. So the things you'd expect, like we check the title search, make sure there's no new dealings on there, or that everything's been fully investigated. For those pre-checks that James mentioned, we confirm that they've all been completed and everything's in order for those. We check the documents in PEXA have all been completed correctly, and we'll sign them off. We check that our lodgement fees have all populated to the workspace, make sure they're correct and as per our system as well. We balance the financial settlement schedule as per the total funds required to settle as provided by the solicitor. And we'll sign off, certify and sign those funds. We also arrange for the loan drawdown, including fees payable, internal fees, as well as all the funds required to go to the PEXA space. And we also manage surplus funds to go to the customer account, or shortfall funds to be withdrawn from a customer's nominated account. Yeah.
So what I gather from that is there's a lot of dependencies as well in terms of that verification process, and certainly a lot more appreciation for, yes, we're busy in terms of the practitioner space, but you're just as busy on the morning of settlements to prepare. So that's fantastic to hear that there are so many verification processes, but also that an appreciation for that morning of. So thank you. And in the similar theme of morning of, we've got another question around the 4 p.m. cutoff. So as you can appreciate, in Queensland, with time is of the essence, that 4 p.m. Becomes exceptionally critical. And just as we have a level of preparation and getting ready for settlement on the morning, we're also looking at that sort of 4 p.m. cutoff. So being as critical as it is, and you're aware of that for all parties concerned in the workspace from a Queensland perspective, how can practitioners, so our members, so our practitioners, how can they, do you believe, assist you guys as banks in meeting this threshold and ensuring timely settlement? So what can our practitioner members do or be focusing on?
I think a really important component of that is actually just making sure that everything in the workspace is signed off early enough. Even that the cutoff is 4 p.m. From a bank's perspective, because we have to have this segregation of duties, because we're sending large volumes of funds, we can't have one person that is solely responsible for the workplace to have full authority to sign everything. So it's not easy for us, to turn around, the full signing of a workspace in 5 minutes, because it needs to be sent on to a number of different teams for two-person verification. And that's a key for fraud control, right? Because, these are the large sums of money that we're sending, and we have to have it so that, there are always two sets of eyes that are verifying every transaction that leaves the bank. So, sometimes we're seeing, someone come in at 5 minutes to 4. Yeah, and it's just not going to be possible for us to actually get our side of the verification done until that point, and we can't start that until the whole workspace is ready to go. So that's probably a really key thing, is just making sure we've got enough time. And another key part of that is the conversations that come in. We're managing large amounts of conversations, so we may not see a conversation that I've signed the workspace now. It might take us 20 minutes, half an hour to actually get to that conversation to say, oh, okay, now this one is signed. So having it done and signed early enough in the day, or having questions or conversations come through early enough in the day is a really key part of that for us. Managing our settlements for the day is also, I guess, really important for us, because we're dealing with all types of settlements. So we're dealing with purchases and family transfers, but also external refinances with other banks, and just also lodging and taking new securities as well, where there aren't any other parties involved. So we have to every day we have to prioritise our transactions based on dates, times, and types of settlements, so that we're prioritising which ones are really time critical first. So purchases with set times are top of the list every day, and then we move through to our external refinances and further advances and those sorts of things. So managing typically 100 to 120 settlements a day is actually quite a task to try and do that. So day of settlement, the thing that helps us the most is just being proactive and having everything in order as early as possible, because then we can have everything as early as possible. We can send it through to our tellers, which are completely separate, to key the transactions, draw the transactions down in our core banking systems, and then we can roll through with the PEXA settlement.
James, you're saying about the conversation as well. So, being as prepared as can be from a practitioner's side, and let's say on that morning of, and being, working towards that 4 p.m. What are your processes in terms of prioritising those conversations? How does, within the workspace? So what would you be saying to practitioners around alerting you to those critical points?
I think a key thing with conversations, and correct me if I'm wrong, Ruth, is we get large volumes. So we get, the way, with PEXA set up, which is fantastic, we get a lot of notifications when things are already done within the workspace. And then what we find happening is practitioners then sending us a conversation to tell us that they've done it. And we actually don't need that, because PEXA is automatically, notifying us that key parts in the process have been done, right? So what that ends up doing is just adding to the bulk of conversations that come through. Whereas what we really want to see is queries or questions about the workspace, or key important information, that as a practitioner you may need to know from the bank. Not things like, oh, I've gone and signed, I've gone and signed the FSS now, because we'll automatically get notified of that anyway.
Of course, yes. I'm thinking, in terms of being conscious of time and having a few minutes left. One thing finally to really ask both of you is around total funds required, a very topical subject, whether it's it doesn't have to be for the morning of settlement, but generally speaking, and nothing too specific around what, shortened version of it is TFRS. So total funds required. What can you say to members around that would be helpful, just in terms of your preparation for total funds required? to settle within the workspace?
I mean, I can jump in on that one
Yeah.
if you'd like. Yeah, so for
Sure.
total funds required to settle, the way that we process it, we like to manage shortfall. I think for the majority of our accounts, we would provide the shortfall funds. So it's really important for us that that figure is in there and that it's correct. It's also important to keep in mind when calculating that figure that the lodgement fees that populate to the workspace only populate when all the documents are verified. So it may be another thing to keep in mind when calculating that figure, that all the funds for that lodgement fee may not be there yet. Then if that's in there and that's correct, we will provide the full amount of that figure, less anything that the incoming proprietor has provided to source funds. So if you are providing something to source funds and you don't want that to be included in that total funds required amount, that's something that we would, need advice to us via conversation. But yeah, that's how we calculate that.
Great. Thank you, Ruth. So James, essentially with both of yourselves, before we wrap up, anything further that you'd like to let our sort of audience know around PEXA, Bendigo Bank,
Sure.
settlements for the Queensland market?
Yeah, I think possibly some of the feedback we get is around available loan proceeds. So our practitioners want to see what the available loan proceeds are going to be as early on in the process, which is totally understandable. And I think different banks handle this in different ways, and there's probably some key decisions that each institution has made along that in that process. So for Bendigo, the biggest thing that holds us up in being able to provide available loan proceeds or final available loan proceeds is when we have loans that also involve another loan payout. So we'll be waiting on getting actual payout figures right up until the morning of settlement, to be calculated before we can actually provide our available loan proceeds. And that's even the case for us with internal loan payouts. So a key decision that we've made in the bank is that we don't want to lock customers' accounts 3 days before settlement. We don't think that's a very good customer experience. It causes a lot of heartache. If you do get the unfortunate situation where a loan doesn't settle on the anticipated day, you can end up with a stretch of over a week possibly, where a customer doesn't have access to their account, which is really not a great experience. So we don't lock accounts before the day of settlement. So we calculate those payout figures on the morning of settlement. And then that's when we provide those available loan proceeds. And I think for us, it's a difficult balance of making our own lives easier versus what's an actual customer impact. And we decided, we want to be a customer-friendly organisation, so we'd rather take that burden on ourselves rather than push it back to our customers.
Yeah, and in that same mindset, we also take that attitude towards customers' shortfall funds that they're providing. We don't place any stops or holds on their accounts when they're providing shortfall funds, so that they have full access to that account up until we take the funds out for settlement. So that also can only usually be uploaded to the workspace on the morning of settlement, so we can be sure that the funds are there and they're available, and we don't risk overdrawing a customer's account or placing stops or holds on there.
Yeah, totally appreciate the customer-centric focus on your approach as well. So thank you both. And this essentially now it's our first of our series. We're hoping to continue these conversations. And James and Ruth, thank you both for joining us today and sharing your valuable insights with our members. It's very much appreciated. And to everyone that's joined, thank you for tuning in today's session. And we are, as I said, looking forward to seeing you next time as we continue the series. Keep an eye out for an invitation and we'll speak to you soon. Thank you.
Thank you so much.
Thanks.